Last segment of our show, Investor Eye. Joining me today in our studio is serial entrepreneur turned investor Sanjay Mehta. He's founder and partner at 100x VC, India's first fund to invest in early stage startups using iSAFE notes. Sanjay, many thanks for joining us on Startup Street today. Now, you launched 100x VC in July this year. You have a target of investing in 100 companies by next year. How many companies have you already invested in the 3 to 4 months of your launch? And are you on target to achieve this?
Thank you, Shruti, for having me on the show.
Yeah.
When we announced this, our plan was to get the first class of 2019 to be announced by October. But we had an avalanche of applications. Almost 1,200 plus applications came all over India. And we had to now push our date to announce in December. So that's where we will be announcing our first class of 2019. So every quarter we plan to have around 20-25 startups. End of the year we would be anywhere around 95 to 105 kind of startups. So 100 odd startups every year, depending upon how we see the applications coming in.
All right, Sanjay. So tell me, what are the sectors that you will be looking at? What is the investment size going to be, the business model that you have, and the investment corpus that you've set aside for this?
Sure. So we invest from 25 lakhs to 1 crore. We use it by do it via iSAFE note, which is an India simple agreement for future equity. And we would be doing across, as I said, across 100 odd startups. And this is sponsored by my family office, Mehta Ventures, to start with. And then as things progress, we will have other investors joining the pool. Right now, our focus in terms of the areas of investments are into B2B software services, consumer brands, QSR space, medical device. And we are looking at some of the aerospace companies. So we saw some of the good deals coming in the aerospace, which was very enlightening.
Can you share with us some of those names?
No, I would not be able to disclose till we close our investments. But definitely what we have done is curation, which has taken us a lot of time, because we would not like to just pass on the deals which are good and flip across. So we are spending good amount of time evaluating each one of them. And this curation, besides it, we are mentoring these startups. So we are helping them refine the business models, helping them create the right pricing strategy, go to market. So we say that we will be giving you content, we will be giving you connect, we will be helping you with customers. And finally, end where they are supposed to raise the next round of investments, we will help them communicate to the investors.
Sanjay, in my introduction, I said that, 100x VC is India's first fund to invest in early stage startups using iSAFE notes. This is a fairly new concept in India. It's prevalent in the Silicon Valley. How is it going to be beneficial for Indian startups?
So I've been investing into startups, almost 100 plus companies kind of stuff. So my experience investing in startups was, we used to have shareholder agreement, which were like 50 to 100 pages, strong document, one-sided, lopsided to investors. Those were not founder friendly. And our focus in this happened across with my investments in US. I did over 30 odd investments in US. And then we realized that Safe Note is a great instrument. Why don't we bring it to India? And my focus to do this early stage startup investment, 100 investment, typical closure in shareholder agreements are anywhere from 3 to 4 months. I mean, with that, I can't do 100 investments. So we had to bring in a new investing document, which is called iSAFE, where we take the equity into future price round. So it's a 4-page document. We sign off, we transfer the money. It's not a debt. They don't have to give me equity right now. We don't take board seats. And it is such a founder friendly document that entrepreneurs are not burdened with anything.
Now, Sanjay, there are a lot of opportunities for entrepreneurs to raise money, be it VCs, angel investors, or even accelerators. If you were to do a SWOT analysis, what should entrepreneurs be looking out for before they raise a fund?
So my 2 cents for all the entrepreneurs is, one, to check the pedigree of the lead investor. Today, I mean, having been part of all the angel group, lead investors are no longer working hard because there is no incentive to become lead in the angel group, and then you have large names on your cap table, so it's difficult to deal with so many people. And then finally you are signing up a shareholder agreement which is lopsided, and you need consent for everything. So my suggestion would be for most of them to look at micro VCs or VCs who are doing this full time, who are involved with them, helping them raise the next round of money. For most of the early stage accelerator or incubator, for them it is more of saying that we have branded or give their brand, saying that this was our incubator. They don't really work across helping the founders, because most of the people who are running them have never built businesses.
So Sanjay, you've invested in over 130 companies and you've seen 14 exits, I believe. What is the typical success rate for for early stage investors like yourself? Successful run rate, what would you call that?
I would say it is very, very rewarding, but you have to pace it over a time. I can't do 100 investments in a year in terms of as an angel when I started across. So you have to pace it over, saying that let me do 10-15 investments every year, build a portfolio over time, because then you get a vintage of every year. Because there are trends saying that this is a fintech, food tech, there are, we see trends in the VC industry. So you will be part of each of this vintage. And secondly, I mean, if I have to just share my numbers, I have returned back 19x of my cash on cash capital to my family, and we are 7.4x on the logged in portfolio. 113% IRR cash on cash and 103% logged in. So it has been very rewarding.
It's been very rewarding, true. Now, Sanjay, in this current economic scenario, what is the kind of approach that investors are taking? We've seen big ticket deals happen in the past, but what is the current investor outlook like?
So the larger funds are looking at putting more and more money into their existing portfolio, building up the corpus in the proven deals kind of stuff. And whereas the seed stage funds, which were doing around 3 to 5 years back, have now raised larger chunks of money, and they also are doing larger deals. So early stage ecosystem is actually starved of capital. We have seen the number of deals happening in that stage have died down drastically.
All right, Sanjay, it was a pleasure talking to you. Thank you so much for joining us on Startup Street. With that, it's a wrap on this